Hello, amazing trader. Welcome to my YouTube channel once again. My name is Shin Forex, and in this video, I'll be what it means to be a swing trader. Because most of the time in the market space, when we ask a lot of traders, what is your trading style? Why do you want to pick any trade? Like, if you are to pick, what kind of style will you like to pick? A lot of them usually runs mouth like I want to be a scalper because there are different type of traders in the market. We have scalpers, we have day trader, and we have swing traders. Scalpers are the set of traders that enter market within 5, 10, 15 minutes. They already exit the market 1 hour. Why day trader are kind of trader that they enter that day and they have to close their chart that day. That is when the day trader enter market 9 a.m. in the morning. By 4 p.m. in the evening, they have already closed their trade before the closing of the market. Yes, why swing trader? Swing trader are set of traders that when they enter market on Monday, it can take them average of a week, 3, 4, 5 days to exit or take the profit. So why am I diving to this side of analysis this morning? Because I want to show you guys what nobody will show you on social media. When you get to Twitter, you will see a lot of testimonies of I was able to hold market for 1 week, 1 month, and we have been running in pips. But what they never told you was the emotional roller coaster. Yes, the emotional roller coaster of how hard it is before market give them that kind of money. If you have not subscribed to this channel, please click the subscribe button on your notifications and drop your comment below. So thank you so much for doing that. Now back to the whole thing. This is the market. This is the analysis that I run yesterday, and this is analysis I run during the weekend, and we were able to predict the market that okay, this market is actually going to buy side liquidity. And I was able to enter this market at this key level. Yes, at 193,000. Our market broke out exceptionally where market was doing fine. But when market reached this key level 194,039, market could not break it. Then there was a massive rejection. Then at this key level, market keep buying again, and here we are. Now market is coming back to same key level. Why am I showing you this? These are the darkest side of the analysis that nobody will tell you, because everybody is always winning on social media. Everybody is killing the market. Everybody is a chartist. That is why one of the things I usually say is it is so easy to predict market that has already moved. It's so easy to be running out to say, you see this market, I was able to cut it here. When market come to this place, we cut it, we sell here, we buy here. Those ones are bullshit. This is real emotion now. When I say real emotion, imagine market has already gave me average of, I was able to enter here. Market gave me, this is 110 pips. That 110 pips right now is 50 pips. It means that average 50% of it is already gone back to the market space. And we don't know whether this thing will send us out as break even or yes, because that should be at least the wisdom is to put it in break even. Now, I was able to know that market will reverse here before the course of this Fibonacci key level. So if you don't like using many indicators, consider Fibonacci today is one of the best key indicators to use. It works. Not every time, but whenever it works like magic. You can see that Fibonacci key level of 0.618, which is between 0.05 and 0.618, is where that retest happened. And it was a perfect entry mode. Yes, it was a perfect retest key level. Right now, market is still on buy side, but you can see what I'm talking about, that 50% of that market is gone, and today is Tuesday. So see, imagine the emotion you are make $100 and before you know your market come back to $50, and you are not even sure whether that market will send you out with $10 profit or even stop loss. So that is the darkest side of trading nobody is telling you about. Because when you go to social media, everybody is winning. Because it's so easy. By the time this market breaks this key level, this resistance level, our market was moving massive profit to 250 pips. Everybody can be running mouth that I was able to cut it. But this is the darkest side of being a swing trader. That despite you running the analysis, do not mean because your analysis is working at the beginning of the analysis, do not mean that all those analysis leads to profit. But there's one advantage that swing traders have over others. For example, now, because I was able to enter at this key level now, without stress, I might not need to enter here again. I'll just leave the market and let the market do whatever it wants without stress. Because you see, from here to here, a lot of traders have blown their accounts, a lot of profit, because immediately this market was pulling down. Some of them think market is already selling and they already click the sell button instantly. Immediately market rejects it at this key resistance level again. Some of them already pull massive sell, thinking market is coming to this key level. But it's not. So because daily bias is still strong, this is 4-hour time frame now. Market is only finding support at that key level. The daily bias is still strong. Still strong. You can see now that this 0.05 now, market is already rejecting this Fibonacci key level. And from here, massive profit to this key level. So that is one of the reasons why, as a trader, you must trust your analysis. Yes, you have to. If you don't trust your analysis, why are you even a trader in the first place? You cannot be mixed with the crowd. If you are lost with the crowd, you will not be profitable. If you have to understand how market moves and never ever lost in the crowd. That's number one. Number one lesson, let me put it somewhere here. Learn to trust your analysis. Yes, you must be able to trust your analysis. That is number one lesson. You have to trust your analysis no matter what happened. No matter what happened to this market now, I don't care. I do not care. I'm ready to stay with it. As long as it does not come to this key level, I do not care. Yes, I know a lot of scalper will say, I would have made a lot of profit. When market was buying, I would have buy. When I would have bought this market, when market was selling, I was easy lie. Because as a human being, as a trader, your brain is not a computer brain. You cannot catch all the precision per time. There's no way you'll be able to pick this one, pick this one, pick this one, pick this one. It's not possible. Out of these four, it's possible that you might have lost two accounts, like two entry missed. Two entry might be stop loss, while two entry might be break even or TP. And that just two entry, if it is 1:1, it means that you have not win anything, because imagine from here to here was 1:1. Maybe you win this, you win this. Maybe you won this, you won this. Then from here, you now miss this one, you miss this one. That is, you have not traded for that day. You only participate in the market noise. So that is why, as a trader, know what strategy fits you. So you have to be, your precision have to be extremely sharp. Your mind need to be on point. You need to calm down. You need to be emotionally stable before you can pick any strategy, not because one of your mentors said this is the best kind of strategy to pick. You need to pick the strategy that fits you, that fits you. This is my own, so no remorse. You stay with it. When it works, you stay with it. When it doesn't work, you stay with it. Because imagine just enter market single time and you're able to catch 250 pips in a single entry. What am I even saying? It's not even. Now, this is from here to here. This is 300 pips. 291. Yes, this is 291 pips in a single entry. Whereas a lot of traders buying and selling, buying and selling, buying and selling at this key level. But you are not disturbed. That's one of the things. You must trust your analysis. If you have not developed the confidence to stay with your analysis, go and read, go and buy some forex books and read them. Go and study yourself. You need to understand yourself. You need to trust who you are. You need to trust your judgment. Don't be freaked out with a lot of noise in the market space. Trust your analysis. That's number one lesson I am able to learn from this. Number two, your entry matters. A lot of traders used to say that your entry does not matter as long as you understand the market direction. Is a bullshit. Your entry matters. Don't let anybody tell you that your entry does not matter. Your entry matters. For example, because I was able to enter at this key level now, I have a form of confidence that for market to come to this place, then it means that this buying side is gone. And how am I so sure? If market begin to come and break this Fibonacci key level of 0.618 now, I will know that there's nothing that can be done. This buying side is not effective anymore. But as long as this key level hold and this both of them hold, this golden ratio holds, then I'm good to go. So if somebody is saying that your entry does not matter, it means that except you enter here or here at this key level of 0.618, your entry matters even when you know the direction of the market. Your entry is extremely as important as the final bias of the market direction. Because if you don't enter at the right time, you won't make money. So don't let anybody bullshit you that your entry does not matter, as long as you understand the direction of the market. When market was changing up, because market, this is higher, lower, high, lower, low. This is lower, high, lower, low. Then lower, high, then lower, low. The market begins to do what? There was a change of character here. That is, market begins to move sideways. So at this key level, I knew that, okay, the best perfect entry is I had to go into 15 minutes to go and see what market is doing. And I was able to see this double bottom here and here. This double bottom was what gave me an entry. So I was able to enter at this key level of 19200. So if anybody is telling you that your entries do not matter, is a lie. From this analysis, market actually shows that your entries matter. That's number two. Number three, don't be greedy. A lot of traders are very, very greedy. Because when market broke out of this key level, they'll just be stacking and be stacking. If you are stacking, you can't swing trade. Yes, you have to be like a sniper. Enter the market at a precision level and let the market do its thing. The best way to now enter market now is when market came to this key level at 0.618, perfect entry. But after this place and maybe 0.05 when market is about to leave this spot. But without it, it will affect your account because you can be in the market, but because you are stacking and stacking and stacking, you can lose the entire trade. Because by the time all the stack analysis, all the stack entry you have done, market will just come out at this key level and send you out of the market. And 60% of your profit is gone. So by the time you eventually take the real profit, you are depressed, you are hungry. So when you are a swing trader, stacking is not really for you. So think twice before what you see on social media to deceive you. Then number four, that this analysis is showing Number four, market can do whatever it wants anytime, any day. So that is why there's no holy grade in the market space. So don't let anybody tell you that you see when market come to this place, it bounce back, it move out. That is bullshit. It's so easy to explain all this. They have already played out. Say when market was moving, there was a just bounce. Those ones, they are the easiest part of the market. But when you are in live market and your money is on the line and your emotion is shaking, or you have seen profit and now less than 24 hours later, 60% of that profit is gone. That is when you will know who you are as a trader. You will begin to doubt everything in you, like, am I normal? Why can't I take the previous profit? But you must trust how you trade. Trust your analysis. Don't be in rush, because by the time it work out, it pays more, because your single entry will give you average of 1:7, 1:8, 1:6, in which when you take that kind of profit, you are done for the week. When others are clicking buying and selling at the end of the week, the profit they're able to make is 3%, 4%. You can make 5%, 6% and get out. And as a result of that, you can just trade twice a month, 3 times a month, and be okay with your analysis. So that is another thing, that market can do whatever it wants. Market could have break this key level, retest it, and continue the buying side. According to this drawing, market could have break this key level, retest this support level, and the buying side keep continue, and by now market might have already almost reached this key level. But this week market decided not to do that. It reached this key level and come to this, and it's playing here. So nobody has holy grail. If anybody tell you that they have the best strategy in the market space that will increase your profitability, is a marketing scheme. Holy grail is an illusion, because every strategy works, but they work in different time frame. They work in different market condition. So the most important thing is find the analysis or strategy, find a strategy that synchronize with your ideology, with your emotions. A strategy that can work both in ranging market and seasonal market. What does it mean? The kind of strategy that I have now, it does not work every time, so but when it works, it can give me what I need, and that's all. So don't let anybody tell you that the holy grail, in fact, the market they have now is one of the best analysis they have now that is killing the market, is a marketing gimmick. Is a marketing gimmick. Nobody has it all in this market space. We all know in part. Everybody know little things about the market. That is what makes market exciting. If anybody is telling that they have cracked the code, you are the liquidity. They crack nothing. They crack nothing. And that's the little things I want to show you guys about this analysis, that market is dynamic in nature. It is a combination of order and chaos. And it's so easy to explain market that has already moved to profit than life market that is, real life. Real life market is one of the hardest things, because you don't know. Market can do anything per time. This market can decide now to break this every key level here and begins to sell. Immediately, there's nothing we can do. Nothing. That is market for you. That is why it is called market, financial market, for a reason. Whereas market can decide now to break this resistance level and be buying massively, and everybody be wondering, where is this market going? That's market for you. The most important thing is run your analysis, test it, trust it, take the trade, and leave the market alone. That's second to the last. The final warning: before you buy any prop firm, know their rules. Before buying prop firm, know their rules. Yes. Before buying any prop firm, know their rules. What do I mean by saying that? You see, a lot of prop firm, their mission is for us not to be a profitable trader. They want to do everything in their way through their rules and regulations to make sure that they messed you up emotionally. For example, if your prop firm is equity-based drawdown, not balance-based, and you enter this market at this key level, let's say your profit target is around here, this 194, 563. Let me show you what I mean. Let's say this your take profit is around here, and you have been anticipating for this market movement that market is coming to my way, everything is fine, everything is fine, everything is fine. Did you know that as this market is pulling back to this key level now, your daily drawdown is already being affected? Because immediately we switch to another day, your entire capital when market came to this key level here, the system has picked it up as part of your daily drawdown. So which means that if your profit target, let's say the account is $100,000 account, and you're expected to make $8,000, and you already reached 6,500 in your analysis in as market was moving. But because you're a swing trader, you're like, you don't over leverage your account. So why should I take the trade? I am good. But because of prop firm rules of end of the day equity-based drawdown, what will be happening is immediately that market closed, within few time when market closed and open for the next day, what will happen is their system will have picked it that your maximum profit has become part of your daily drawdown. So which means that your 108,000, it will now be, that 108,000 is now your maximum money. So your daily drawdown will now be, so it would have increased instead of decreased. But if it was balance-based drawdown, you care nothing. Your balance-based simply means that if you buy $100,000 account and you have made $7,000, if you lose that entire $7,000, it does not affect your account. You have not broken any rules of the already. So what am I trying to say? If you want to be a swing trader, think twice before you buy a sharp prop firm. Don't buy a prop firm you cannot swing on. Don't buy a prop firm that will use market weakness to send you out of the market, because let's say this market now retraces back to this key level now, but it refused to send me out. If it is equity-based drawdown, I might have reached daily drawdown for that day. You know that the profit target for the day is more than daily drawdown. Maybe the profit target is $10,000. Daily drawdown might be 5,000. And you have already made 5,500 in the previous market. Maybe before previous day, you already made $6,000 profit. And your daily drawdown is 5,000. By the time market came back to almost your entry, that is all. You have already lost the entire prop firm. So before you buy a prop firm, go and read the rules and regulation first. Don't be emotional. Don't just buy prop firm because they are doing promo. Don't buy prop firm because one Idolu says is the cheapest in the market. Don't buy the prop firm because you can pay in your local currency. Buy the prop firm. Before buying it, know their rules, because their rules can enhance your profitability or enhance your loss faster. It's going to be your choice. So before you buy any prop firm, think twice. Go and read their rules extensively. Don't be emotional about it. Check everything they are saying first. If you don't understand, go to their customer care, chat them up. If you don't understand, enter their Discord. Go and see what people are saying, what people are complaining about in their Discord. Because whatever people are complaining in their Discord will happen to you in time. So finding out all those basic things will help you as a trader. So if you're a swing trader like me, when you buy a prop firm that is balance-based drawdown, maybe like, I shall not mention names, but go and find prop firm that has with balance-based drawdown. It will help you. With this kind of trade now, you will not be afraid. You will not. You just keep your cool and do your things because you know what you are doing. You know that this thing will work in my way at the right time. So those are the little things I have for you guys this morning. Thank you for watching to the end. Please, if you have not subscribed to this YouTube channel, once again, my name is Sean Forex, and thank you for watching to the end. Please click the subscribe button, share with friends and family, on your notifications, and if you have any questions, drop your comment below. As this market progresses, I'll be updating you guys. Till I come your way again next time, be safe.